And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, August 8th, 2021. Friday's trade was on one level very disappointing and on the other level very revealing. We had all this pent-up energy, I felt, waiting for the unemployment or the employment situation figures to come out. And when they did, the market initially dropped lower and then it rallied and then it had no idea what to do. So we didn't get that pent up energy that I felt would come on both sides, that if it was an acceptable figure that they would race the market up from the buy energy. And if they were disappointed in the figure that they would just run it lower. That did not happen. We did get both sides coming in and both sides moving the market. And the market eventually did not take out the highs that we got on Thursday in the close, and then did start to move lower into Friday's close. Now, the market right now does present a little bit of a challenge. So I had taken a step back to look more closely as to the current and alternate views for the NASDAQ. I've switched the labeling around to look more closely towards each alternate view that carries a stronger probability of being in force here. So allow me to recap what I do feel remains in place. The NQ remains in the process of tracing out a minor wave 5 advance that began off at the July 19th lows down here at 14,445. And within minor wave 5, I have counted as complete minute waves 1, 2, 3, and 4. 1, 2, 3, and 4. And that remains the case right now. But I still have a little bit of problem with what's all happening in here. So let's try to take a look at what the alternate counts may be telling us. Right now, as I have it labeled, I have discussed previously how this minute fifth wave up could be forming a diagonal triangle. Within a diagonal triangle in the fifth wave position and the 5-wave structure, waves 1, 3, all the waves actually form ABC structures. So that means wave 1, 3, and 5 will be 3 waves instead of 5. But it's a 5, 3, 5. So I've now put that label on to suggest that, but now we're still waiting for the market to give us confirmation that that is indeed the case. Now, if it is, then we're in a subminute wave 2 correction. And already we've broken below the hourly 200 MA. And that kind of leaves us a little bit with the possibility we're not going to drop to 14,990 or 14,950 or as low as 14,915 to 22. What it can't do under this count, if this is a subminute wave 2, excuse me, it cannot drop below 14,811. That's that low right there. So I need to adjust these Fibonacci's, but it's 14,811.25. So if that happens, because this is open ground, this could slide very easily. These are very high levels. The market has been consolidating in this upper 8 of all-time highs, so when the selling really comes and the buyers back off because they no longer believe the market's going to go above 15,100, well, then they're also going to want to switch positions. So we can slide and we can pick up the speed and we can pick up the intensity of which we're dropping. Now, if it breaks there, then we have an additional alternate, which would suggest that this minute 4 is still in force. And what it's done is A and the B would be moved up to here. It would present us with an irregular B wave, totally acceptable, totally common in areas of new highs. And so in essence, what we get is in a B wave up and a C wave down, which still can be just as crushing as we're this expected to, wave 2. So the 4 completing, we would then expect it to drop below 14,774. And that would be the first level, but then we have additional support at 14,721 and 14,668, I'm going to call it. And to tell you the truth, the most common relationship within a corrective wave that has an irregular B is that the C wave will be 1.618 times the length of A, and that, or excuse me, 1.382 times the length of A, and that comes in right here at 14,667. The next one up is this one, 1.618, which is 14,581. So both of those can be in play, but we're going to disqualify 14,581 simply because it can't drop below 14,642 and still be a fourth wave. So I would allow it all the way down to here as this stronger and longer minute 4, which would just be in relationship to the first three would be outrageous. But I can go back in Elliott and find other instances of this being the case. I just haven't really found it more recently. So I'm going to stick with the first one that I have, that this is all going to form. So we're going to look for 3 waves down. These are the areas that I think that it can come to. And then see if we don't just pick up in a 3rd wave, which should just be dynamic, as we have seen in the past. But what will happen now is wave 3 will form 3 waves up. Then we'll get a 4th wave, 3 waves down. And then we'll get a 5th wave of 3 waves up. And it will all wedge as it thrusts and powers higher. So we still have a lot of potential for the market to get back up into these areas to finish this larger rally. Now it's going to give the feeling like, no way, Jose, because we're just going to drop. But we have a lot of ground to cover, and we still have a lot of time before we come back in tomorrow morning to trade. So I'm going to leave it right there. I'm going to leave it that the high at 15,172 could be the completion of this first subminute wave 1 of this minute 5th wave, which is going to form a triangle, a diagonal triangle up. So it pinnacles up to, if you're looking at a triangle, you've got the bottom and then you've got the 2 points that just wedge higher. And that's the point that it's going to come to. And so each ultimately though, either alternative view right now, the B and the 1, should yield and continue to suggest that an additional powerful rally to new highs remains in the near-term picture for the NASDAQ. And it also fits together. We could get a stronger slide here, which covers in all the different markets. But right now, the weakness continues to be to the downside. And there's probably a multitude of reasons for it. But right now, I'm just going to trade what's in front of me. And this is what I believe we got going on right now. And this is where I'm going to leave it. Continue to trade what's in front of you. Continue to trade using moving averages and move it down. Don't forget that we can go all the way down to these small. And that's where we're looking to see where are the moving averages. So if this thing turns, then we're going to be looking for them to turn, and then we've got to see them all turn. So first the 1, then the 2, then the 5. And if they're all heading in the same direction, which they are now, you can see 200, 50, 20, 8, 4, 200, the 100, but that doesn't make any difference. And then we have the 50, the 20, and the 8 and the 4. Same, 200, 50, 20, getting all chopped up in here. So they're still all pointing down right now. And that's how we're going to have to trade. That's where I take my cues from. I'm taking them from what I see in front of me and what my moving averages tell me. We'll figure out the count later. But we also have Fibonacci resistance now, which was support. Right? Fibonacci support, that'll be resistance if the market moves back up. And then we have the next levels down. Okay, I'm going to leave it all there. Have a great trading day tomorrow. The next update will be Monday, the 9th.